I know it's been a few days since we actually covered COMS Sovereign holdings, but this is going to be a recap. Let's go ahead and just go over all of the price action because it looks pretty good for COMS thus far. I do have a couple things for you guys to look out for though. And let's dive right in. So what is up, you guys? This is ARCa coming at you once again with a COMS. Actually, we're going to do this on technicals. Let's go ahead and do it on raw price action as well, maybe some candle analysis. But yeah, let's go ahead and cover those things. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. With that said, let's go ahead and dive right in. So this is the 8-hour chart that we're looking at for COMS. This is the recap that we're talking about. So we noticed that we were that we were in a large descending channel, and usually these descending channels present a reversal of trend after they're realized. Okay, so now another thing we noticed is that we were well within another bullish trend reversal formation called a broadening descending wedge within the larger descending channel. Now the play was very complicated within this because we do need to follow the golden rule of three per formation here. So you're looking at test number 1, 2, 3, followed by a capitulation event as per the playbook, and then in a true breakout at test number 4. Now, usually after test number 4, we do need to come back and test our newly converted resistances into support before continuing on to the upside. Now, within this formation, we're looking at test number 1, 2, 3. Of course, I mentioned here when we broke out, I do remember this. I mentioned here that the likelihood for us to come back and reclaim the channel and reclaiming our descending broadening wedge for us to confirm a true breakout on test number 4 is very likely. So test number 4 happened within the descending channel, but we did do what I said, and we came back and right into the area where I was looking for, and we reclaimed the channel. We then broke out. We came back and tested the newly converted resistance into support, and then we broke out once again from our descending wedge, and we have since confirmed this new area of support. So this was previously a resistance, now it is a support, and it has been confirmed, and now we are moving to the upside per the playbook. This is it gets a little more complicated when you start to see two different formations within one formation. Honestly, I apply formations within my trade so that I can be able to show an easier perspective for the layman, so that you don't have to only mathematically back your thesis. So I'm going to show you in another way using other formats because I'm familiar with Elliott wave theory. I'm familiar with Fibonacci retracements. I'm familiar with Wyckoff theory, fractal theory. I'm familiar with a lot of formations. I'm familiar with a lot of this, so I can determine what can be a little easier to be able to understand. And I think that's why people like to come back to me so that they can be able to see a clearer picture as to what's happening. Okay, so if we now take a look at the price action based on the breakout and validation of our newly converted resistance into support, we can see that we stopped right at the 2.618. And the other thing is that you're noticing here that we keep on coming back down under the 2.618, regardless of the fact that we actually touched the 4.618 right here, but there's a lot of 618 touches right now. The 618 ratio is actually a very important ratio. That is the golden mean. It's actually used in natural sciences. It's used in art and absolutely within the trade. Okay, so the Fibonacci retracement tool is suggesting right now some resistance that we're facing from the 2.618. Another thing is that this formation in particular, descending broadening wedges, their target for price objective is usually at the genesis of the formation itself. In this case, the price action is right at about that genesis, realizing once more its true nature. Okay, so this candle is massive, and I am looking at it hasn't even returned anything from which what is gained. So there could potentially be a psychological component now applied into the trade, and that psychological component is FOMO. Okay, so now at this point, there could be the people who weren't in at these areas here. I actually did give signals for entry here and here. So this is playing out pretty nicely. I can't guarantee how far we're going to go up, but if I were to put a discretionary guess, I can see that we can touch the 3.618 at about 14.27, 14 cents. If not, we can actually potentially, touch our wick high of let's see, 16.99 of about 17 cents, which is also in confluence with our first spot 618. So these two areas of resistance are very likely for us to touch. Now, if we look at the simple moving averages here in the 8-hour chart, we can see that we have now moved above the 200-day simple moving average, which we can use as a form of support before continuing on to the upside. Very good thing. Now, I don't think the EMAs are near us, but let's just look. Yeah, I mean, the only thing that is telling us that is a pretty good thing is that the 7-day exponential moving average is very much our guide and support now for the continuation to the upside. But like I said, the SMA 200 is very important too. And as soon as in an 8-hour chart, this is very credible. So as soon as we actually move above the 200-day simple moving average, then that can present an overall bullish outlook for COMS. Okay, this can present the continuation of upside gradual, so for COMS, so which is looking pretty good. Okay, so for you fundamental analysts, this is looking good long term. Okay, so now let's go ahead and move on to the last chart, and this is going to be the RSI. Okay, so I have made a diagram for those of you who don't understand or are new viewers or listeners of my lingo. Okay, so this is the RSI, and you're looking at 1, 2, 3, and 4 zones. These are the 4 zones right here, blown up so that you can be able to tag along. Okay, so you don't get lost in translation here. Okay, so the immediate short-term time frame, 30-minute RSI, is suggesting a continuation on to the upside, and it doesn't appear to be slowing down. It is in a pretty high level of overbought. And we have, like, for example, this iteration here, we have retraced from these points before, but I don't see any loss of strength right now. So it's looking bullish in the immediate short-term time frame. We can look at a micro time frame. 15-minute is also suggesting upside. So it's likely for us to see upside in COMS almost right away tomorrow. The bi-hourly is suggesting a continuation onto the upside as well. Please know that this pivot is actually starting to slow a little bit, which is quite common when we're in overbought levels of when we're in overbought percentile, when we're, of the RSI. So now the 6-hour RSI is also slowing down in the upside, but it's still suggesting upside. Okay, so now if we actually just look back a little bit, it looks like there's only been a few times to where we've even reached these high levels in the first place. So we're at about 55% of overbought, still suggesting upside, however. Okay, so now the 12-hour time frame is suggesting a continuation to the upside, similarly to the 6-hour. This is still very good. Now, just for kicks and giggles, let's go ahead and look at the daily. Oh man, okay, so this is absolutely looking good. Tomorrow is very likely, very likely that COMS will end in the green tomorrow, and this is the daily RSI suggesting an aggressive upside continuation and well within the bull strength percentile, okay, which is right up here. So this is very likely to continue to the upside. Bi daily is also suggesting upside from the bull weakness percentile. It is approaching the deep areas of the bull weakness percentile, which just means that we're likely to be gravitated into bull strength. Okay, so I guess we can just look at this one. Yeah, the 3-day is also suggesting upside. You guys, COMS is definitely going to end. If there's no fuckery happening, then for sure, we're going to end tomorrow in the green. Everything is suggesting green for COMS tomorrow. Okay, you guys just keep an eye on your longs. We are approaching critical overbought levels here. Usually when we reach overbought levels of extreme percentages, when we start cooking up here, then, a retracement is likely to happen. But yeah, like I said, I I'm definitely thinking that we can reach the 3 spot 618, if not the 4 spot 618 at about 17 cents. So this is going to be the resistance range from here for tomorrow, in my opinion, without including FOMO or any type of psychological factor like that. Okay, this is just by the playbook. I'm looking at this range here. Okay, so please know that I'm not a financial advisor. I can't actually suggest for you to buy or sell any assets. Please take whatever I do show and iterate within these videos as a form of entertainment. And I think this is going to be the final video for tonight, you guys. I actually tried to squeeze these in for you guys. I'm literally losing my voice. So, but with that said, I wish you a good night. And if you have any questions, I'll leave the links below for you to consider joining the ARCa trading community in Discord and also follow me on Twitter. Okay, you guys? But yeah, with that said, now have a good night, and I will catch you at the bell mañana. Adios.